Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with a lot of the agricultural market news. My name is Joe Nikruto, and I'm here today with producer Carter. As usual, we're going to dig into some numbers, grain, livestock, taking a quick look at corn. It's been a quiet week. We're going to fight through some aggressively unchanged markets here. Feels like we're waiting. It's been a holiday shortened week. We're one day light this week. Today's Thursday. It's Thursday, Friday. No grain markets on Friday for the Easter holiday. Happy Easter, everybody. Hope you get a great Easter basket. Before we start, we want to let you know that if you're interested in hearing about grain market movement and price action daily, you can sign up for our Ag Hedge Hotline hosted by Ted Seifert. Totally free. Gives you a chance to connect with us personally if you have any specific questions about the markets or agricultural commodities in general. If you're interested in learning more about price action and how to make price action work for you, it is a perfect way to take a first step. Link is in the description below to sign up. Totally free, zero commitment. We'd like to remind you, as always, please keep in mind everything that we talk about here today as it regards futures trading and options on futures trading involves risk of loss and should only be undertaken if suitable for your specific risk profile. With that, we should jump right into the numbers this week. Corn, I think, is a great place to start. Corn market opened the week 495 3/4, the high 497 1/2, low 487. Last trade I saw was 490 1/4. That was down 6 3/4 on the week. Funds are long, about 83,000 contracts, and that is notable. Declining volume, holiday week, declining volume. We're not going to sweat that too much. Prices hanging in there. The notes that I left for myself, funds, stock market money with question marks next to both of those. It would seem that the corn market export sales were as expected, but toward the high end of the range today. It would seem that the corn market is hanging in there rather well. Very difficult to find any kind of pullback here this week, in a week where you would not have been surprised to see one. The corn market is kind of standing tall. You look at that chart real quick and we say to ourselves, okay, this is a market that had a really nice run up in the last week or week and a half. Wouldn't be surprised to see that come back and maybe test some of these shorter term moving averages. But so far we have been unable to do that. That'll be a theme here today about how these markets have rallied and not really been able to pull back. I have a suspicion that involves the potential for trade announcements, or it could very well be money from the stock market, money that has been forced to the sidelines due to the weakness in the stock market due to tariff uncertainty, is now finding its way into what many consider to be a value area in physical commodities. Wheat, speaking of value area or markets that have been beaten down, July wheat opened the week 568 3/4. The high was 570, the low 550 3/4. We closed toward the highs at 562 1/4. That was down about 8 on the week. Wheat, 109,000 estimated contracts short in July wheat there in Chicago wheat. We're above the 10 and the 18, but you've got the 50, the 100, and the 200-day moving average lurking overhead, which speaks to the downtrend that we've seen in wheat and the kind of work that wheat is going to have to do to get overhead. Is it possible? Certainly, but a lot of things to chop through their overhead in July wheat. Brings us to beans on the week. Let's take a quick look at the wheat chart before we jump. And again, that's really all that I can see here. Real nice 10 and 18-day moving average crossover. You've seen some strength in wheat, and we're holding that strength above the 10 and the 18-day, which is certainly productive. But then you've got three really bold lines overhead, 572 1/4, 575 3/4, and then 580-ish, I believe, 589 overhead. Significant opportunity for not just previous high resistance, but also this moving average resistance. Wheat market's got some business, got some work to do if we want to put higher prices on that. Bean market opened the week 1050 1/4. The high was 1059. Low of the week 1037 1/2. Last trade I saw was 1047 3/4, down 5 1/4. Beans up, or rather positive on the fund trader category, long an estimated 8 to 10,000 contracts coming into today. Beans are consolidating well above previous price action. Got the 200-day proving to be resistance this week. Couple 2-3 opportunities to trade above it, but always close below it, proving to be stiff resistance so far in terms of closing price action. But watching the bean market consolidate again up here, along with corn and some other markets, you think, okay, what are we waiting for? It would appear that the market is looking outward for new news to come in, and it doesn't take a lot of imagination to think that maybe this is a looming announcement regarding trade deals with other countries, maybe a trade deal with China. That could be, we could be early on expecting an announcement in that, and maybe we are not early. These days, it's hard to tell what's early and what's going to happen and what's not going to happen and what tweets you're going to see in the overnight. It looks to me like the bean market is waiting to get some new information that could throw it out into the back to the 1070, 1080, 1090 area. If you look at this rally off of those new lows and this consolidation, doesn't take a lot of imagination to put 60 cents on top of this consolidating level, which puts you, back to levels we haven't seen for some time, all the way back into January. That's just what the chart says. Who knows what's going to happen in terms of tariff and trade deal, but market's consolidating and waiting for an answer to that question, I think. Meal opened the week. This is July meal, 305.90. High of the week, 306.50. Low, 298.70. And we closed the week at what I think, with my horrible handwriting, is 303.10. That's down 280. Here in the meal, funds are not afraid. Just like wheat, funds don't seem to be afraid to be holding this larger short position. In beans, they were pretty quick to cover. Not so much in meal. Short, almost 90,000 contracts estimated coming into the day. Technically, we look at the July meal chart and say, okay, much like wheat, you made new lows a week or so ago, but here we are all the way back trading above the 10 and the 18. You've got the 50, the 100, and the 200 overhead. So much like wheat, meal has some work to do if we're even going to be able to sustain this rally. You've got some work. In order to get to that 315, you've got to chop through both the 50 and the 100, and then that 200 puts you back up at like 316. Substantial rally in what I believe is a market that will require further short covering by the funds or some sort of outside news in terms of maybe new exports. Hard to speculate there what that's going to take. Oil, tale of two cities. Bean oil, we opened the July oil this week at 47.80. The high was 48.53, low 46.50, and the close 48.34. Here in oil, July oil, we get a really good idea of why we look at these weekly numbers and why we want to look at the chart. July bean oil chart looks just terrific. We're long, funds are long, 44,000 contracts estimated coming into the day. High was 49.01 from April 2nd. And you closed here today at 48.34 off of a high of 48.53, knocking on the door, in my opinion, of that 49.01. Chart looks like it could break out. And here again, if you want to measure, if we can get out of that 49.01, speaks to, from a technical perspective, much higher prices. Why is that? Is it China? Is there a China deal looming? Are we going to see a lot less used cooking oil coming into this country? Is there a biofuel deal? Increasingly, more voices calling for this biofuel deal could have an impact, and that chart could be pointing us in that direction. Fat cattle for June, another market that just cannot be held down. Opened the week at 197.35. The high was 204.35. Low trade was 197.07 and a half. We closed the week right near the highs at 204.07. That was up a whopping 727 and a half on the week. In a week where you would not have been surprised to see weakness in the cattle market that coincided with new weakness in the stock market. Stock market certainly not thrilled with the uncertainty that this tariff situation is bringing the financial world in general. Cattle market shrugging it off. And sort of makes sense with the cattle fundamentals the way they are. Cattle on feed today, we don't have those numbers yet. That happens after this broadcast, but cattle on feed numbers probably going to say, like previous cattle on feed numbers have said, that the numbers aren't quite out there yet. You're not seeing the kind of heifer retention you need to grow this herd, and we're sort of moving. Of course, you're starting to see impacts from the discord between the U.S. and China in the exports of U.S. beef, but maybe that's not that big of a deal. Up 27.5 on the week. Funds appear to be adding to long positions. And in a lot of these markets where they're long, the funds don't seem to be that nervous about holding these long positions. Same thing in cattle. Could be a hedge against inflation. Could be that the funds know that money is flowing into cattle and maybe they have a handle on the fundamental situation specific to cattle as well. No cattle weakness this week in a week where you would have expected to see weakness based on what was happening in the stock market. May feeders, again, leaders opened the week 280.12.5. The high was 286.97.5. Low 279.37.5. And we closed the week at 286.85. Right at the highs, up a whopping 8.15. Feeders are the leaders. And there's another chart that you really don't have to be a market wizard to divine the tea leaves there. That 286.97 puts us right near a swing high before we fell apart a week or so ago. We've taken all of that downside move back. And that, to me, when I look at a chart, that's a big deal. And you're starting to see volume increase on a daily basis. If you look at a daily chart, you're starting to see volume sort of pick up. And to me, that's kind of all we need to know, is that you've got a very strong chart that has taken back what was a knee-jerk response to, or what was a reasonable, rather, response to this tariff situation. We've taken all of that downside price action back, and feeder cattle look to be poised to break out and make new highs. That concludes our podcast for this holiday shortened week. Happy Easter to everybody. Hope that you are safe and have a great time this holiday weekend. Thank you for listening to the Zaner MarketCast today. If you need more because you just can't get enough of us, you can follow us on Facebook at Zaner Ag Hedge or on Twitter and LinkedIn at Zaner Group. If you have any questions you'd like answered on this show, there's a link for you in the description to do that. Just follow the instructions and we'll answer your question on air. Thank you again, and be sure to like, comment, and follow the podcast to not miss a beat. And we will be back with you as price action develops. Have a great weekend.